Hi, and welcome to StockTwits. I'm filling in for Brittany last minute, and we're just going to start off quick here with a day in the life.
I'm in a little MGM and I'm still in OIH. I bought it this morning at 107.50.
Apple's good.
You don't buy in the first 5 minutes of the day.
I live in Jersey City. I was born in Long Island. Went to school at SUNY Albany. As a firm, we are 5 partners, and I'm one of them. I am the strategist that puts the game plan together for about 400 traders. I kind of command that army. What's going to make us money with that is on a day like today, if it's up or down 3 handles, that's when you see where other money is really getting put to work, and that's where the action is. You held 1,600 the whole time?
I got 1,000.
See, that's a growing experience for you, brother. All of the traders trade our money, so they have to be right. They have to say, okay, I think Apple's going from 260 to 265, and if they're right, they make money. It's a good setup. Stick with the win.
Okay.
It's the right trade. Don't watch it so close. Relax.
Scott's coming on in a minute, so we're going to listen to Scott.
Scott, technicals first. Market looks good. Volume seems a little light. What do you see?
Right now, the market's behaving very well technically.
Let's talk to this guy. Now, here's a guy, Scott Redler, who does nothing but technical analysis, but puts his money where his mouth is because he's got a firm and his partners put their money in every day and trade on technical analysis.
I'm not looking for a home run. It's not a get-rich-quick scheme. If I'm able to pick the direction of the market, I could book a winning trade, and I could provide for my family.
Where's the breakout? That is the next evolution.
Hello, my name is Scott Redler, Chief Strategic Officer of T3Live.com. We are here with another session of StockTwits, and it's been a while. It's been a while since the hurricanes, a while since things been back to normal, so we're very happy to be here. I have Taylor with me from my desk who's filling in for Brittany, and you know, I could get into a whole explanation of everything that's gone on, but you know what, it'll be best be explained through the questions. So with that said, let's go to the first question. There's a lot that's been going on since the election, since the hurricane, since the correction, since the outside reversal, and you guys want to know what's trading, where the action is. So here we go. So Taylor, take it away.
All right, great. Our first question is from Fraser ED. What are outside and inside days, Scott?
Funny thing is with technical analysis, everyone asks questions about situations. And outside day, inside day, you talk to someone in normal life, they'll be like, outside day, inside day, it sounds like red light, green light, 1, 2, 3. Right. But they mean something, and it can make you a lot of money. And you know, just to talk about the most recent outside or inside day, anyone that follows us on Twitter or is on the virtual trade floor, you know that an outside day has meaning. An outside day means something is taking place where you might have to switch gears, where we might get a really nice active cash flow trade, but it could also lead to a bigger direction change or inflection point. So if you look at the chart of the SPX, you will see that on, what was it, November 16th, right here, you had your first outside day. All right, we talk about trends, we talk about trading the intermediate trends, and if you remember, on June 4th, right around here, that was the last time we had an outside day. That was the last time after a nice correction of about 8-9%, you saw a direction change. We weren't sure if it would lead to anything, but you had a nice move. You saw commitment to it, and then all of a sudden, you know, we wound up going higher all the way into the September highs, which was about 1474. Then we had that choppy action. Remember that choppy action? Hard to make money, hard to trade, hard to maneuver, and then we broke this trend. This trend got broken. The June 4th trend got broken around 1430. If you recognized it, you could have taken some risk off. You could have gotten short. You could have changed your composure. And then from 1430, we went all the way down below 1350 to put in a low here of 1343. But what happened? You asked me a question, an outside day. All right, what an outside day does, if you bring it to me, is it signifies that the direction that we're in could potentially be over. Okay, it could be a switch. It could be a ball change. You go from offense to defense or defense to offense. And from then, that's the day that the Bears typically fumbled the ball. And it was the Bulls' job to take the ball, run down the field, get a few first downs, and put themselves in a position to score a few touchdowns. So if you go back to the chart, you will see here what needs to take place is a few different things. Here's your outside day. A lot of guys, I remember I was in Vegas, we were giving a traders conference. That was the day we got excited, and that was the day you could get along some spiders. Right here is 1348. We went below it, went as low as 1343. You could have bought it when it recrossed 1348 because that was your outside day. Put a stop in here, and then what'd you see? You saw appetite. Appetite down in these lower levels. People said, you know what? I sold 1430 correctly. I might have even sold some strength when the oscillator was up plus 60 at 1474. So why not give it a try? Then you saw appetite. Then you saw commitment. We had a follow-through move into Thanksgiving. I know yesterday was a little tough. Yesterday we broke below, and then we held the 200-day. You go over here real quickly. I'm just going to go off the cuff and show you my fibs here. This was your Fibonacci retracement level. This was the high here. So I tried to talk about commitment. We held the 38.2 right there. Fibonacci retracement showing commitment to that move off the lows, and then we reversed, engulfed this range, and here was your continuation. So right there, that outside day meant a lot. Meant a lot to market timers, meant a lot to me. Taylor, did it mean a lot to you?
Of course it meant a lot to me.
I was in the West Coast getting text from Taylor saying, what are you doing here?
Yeah.
Apple reversed, the spiders reversed. What are you taking long? I remember that because she knows what it meant.
Yeah.
Sometimes it means a lot, sometimes it doesn't. That day meant a lot. And then you go to the next question. Within that question is what's an inside day? All that is really digestion. It means that market's taking a pause within a move to potentially move higher. You go back to the chart and you will see here, here was your outside day, here was your extension. This was an inside day. It was an inside day within this range. Holding higher meant something. Here was another inside day, small little range day before extending. Then you had two inside days within this range before continuing. So an outside day, in my opinion, is a day to take notice, a day to measure the action thereafter, and an inside day is a day to digest, a day to take a pause, and a day to figure out whether or not that outside day will lead to a direction continuation. And from the November 16th low, it's been a really nice move, 1350 today. I think we hit the 50-day, and now we'll see if we get an inside day or so to then continue. Now back to you, Taylor.
Okay. Well, Facebook has been on fire. So we have a question. Do we know what the surge is about? It's from Marius.
So do we know what the surge is about?
Yeah, do you have any idea what's behind this? All of a sudden, massive buying in Facebook.
See, that's sometimes a problem because everyone wants to know what's behind it.
Right.
They're asking what's going on versus or who's to blame instead of the price action. And the chart in Facebook has changed.
Right.
We talked last week about putting Facebook on your A-list, right? Facebook's been a disaster, horrendous IPO, underwriters priced it wrong. Everyone wanted to get paid. The average investor, unfortunately, probably chased it and got a little beat up. But we saw some nice lower level consolidation. We saw it happen once or twice before that failed, and this time it's following through. So maybe it's because it's lower, there's a better valuation. Maybe it's because it's sold out. Who knows? At this particular point, this is when it came public, disaster all the way to the downside. Came back up. You guys remember I started talking about how it was acting a little bit different, how potentially it could continue to the upside if it broke this trend line. But you know what? It didn't. I got stopped out right there. Lost a little bit of money. What could you do about it? Then from there, continued to the downside. And then from late July all the way through November, you saw a lower level consolidation. A lot of accumulation by institutions. People still getting short. And then what happened? Right around here is when they said 800 million shares were going to get unlocked. At that particular point, people thought it would go to 15. It was going to reach that barren spectrum and break below 1755. It didn't. It ignited. I was on my way actually to the West Coast, talked about it. It was a really nice trade. And what happened? It showed friskiness. It went right back to this resistance, right back there. But again, from 20 up to 24 was a little difficult. So what do you want to see? You wanted to see commitment. And within that time frame, you saw commitment. That was right around here. That's when I started tweeting about it. I said I'm in tier 1 right around 23 and change. And then the add-on for cash flow was when it went into this gap. Okay, when gaps get filled, it no longer controls the direction. That means it's a new situation. So your add-on was right around here at 24 and change. If you did so, today it closed at 27.30-ish. So either you got involved right here, or even if you got involved a little late, you've had a really nice trade Not sure exactly what's behind it. Maybe it's because of monetizing search. Maybe it's because insiders sold enough stock. Maybe it's because enough people were put through enough pain and the media talked about it enough. Who knows? I like to watch the price action. We saw volume surges. We saw a lower level channel. It finally was able to get into the gap and hold it and not be pressed by shorts. So to me, I am trailing some. I am trimming and trailing. I got involved with a decent amount of size, and now I'm just holding some to enjoy the ride. Whereas when we get a new setup, maybe I'll add some, but at this point I'm not adding, I'm just letting it go. So this way I have some money booked and some money just letting go to see where it goes. And if I start seeing it get pressured, hitting bigger resistance, then we'll reevaluate it. For right now, Facebook's been a really nice trade for the last week or so.
Okay, so we have a follow-up question to that from Arnev that is asking if it's time to short Facebook now.
Everyone loves to short stocks that are going up. And why? You know, wait for some kind of chart pattern, some kind of reversal pattern. And if you take a look back at the chart of Facebook, you know, don't be. You know, it did come from, what was this, 45. It's still, as much as it seems like it just had a really big rally because everyone's talking about it, it's only at 27. So all in all, why short Facebook? You know, and it closed the highs of the day. And when the market pulled in for 3 days, it didn't go down. So it's still showing relative strength. It's still on its way. I would say at the next price point of reference, will come into play a little bit closer to 29, you know, or maybe even 30. So at this point, I think there's better things to short. Just don't short Facebook because you think that everyone says the valuation isn't there and it's not going to succeed. At this point, it is a little extended from the 8-day and the 21 and the 50. It's had a nice run, so you could take some profits along the way, but it doesn't mean it's a short.
Okay, thanks, Scott. Our next question is from Chicken Legs.
Chicken Legs.
Chicken Legs 427. I love this name. Can you talk about when to add to a winning position versus trail and trim?
Okay, so I think that has to do with our tier system.
Yeah.
And that's why we have it, because sometimes you want to be in a feeler.
Right.
And sometimes you want to add to it and then let it go, and then you trim it and then you trail it. So I think a really good example of that is something we've spoken about in the last 3 days is Google.
Right.
Something we've been trading on the floor in our desk. It perked up 3 days ago. So you never know when it's really gonna, you know, work out. So at first you want to put on what I call a tier 1 or a feeler. And if you look at Google, we'll go to that. It's a great example. Google right here, if you guys follow us on Twitter, this was the first day that it had a nice wide range bar. Okay, it obviously was a disaster. I got halted at earnings. It broke down. It engulfed this entire upper range. But if you got out correctly, you get a new life down here. So for me, okay, you look at a situation where you had the reversal the same day that most of the market did. Then it held higher, went sideways. So this was the first day I tweeted. You know, this is a StockTwits show, so I could talk about it. And I said, I'm getting in a feeler of Twitter. I'm kidding. Google. And that was the day that this was, what was this? This was 11/27, right? So November 27th, look at the size of this bar. And if you go to the spiders, just real quickly, on 11/27, which was 3 days ago, right? 11/27, you had a red day. So that shows you relative strength. You go to the Qs, 3 days ago, you also had a very inside day here. This was an inside day on a day that Google wound up showing its face, right? Wide range green bar. So in technical analysis land, that's showing you relative strength. That's saying, you know what, something just changed. It might be getting going. It might be something of interest. It might be a place to put your attention. So here's your tier 1. Then you have a descending trend line. So for it to really get out of this area, you want to see it break above 675. And if you come back to me, yesterday, you'll realize that, you know, the futures opened up down, if you remember. And I said, you know what? Google is in the cards of going positive, trading through 675 and continuing. Now, I didn't say that would be a tier 2, but I said that would be pretty healthy constructive action for Google. It's worth a look. It's worth a strategy. So tier 1 was the day when it showed its face during weakness in the market. You go back to the chart, and tier 2 would be when it broke this chart pattern, right? Right when it went above 675. And then some people might have said, okay, wow, look at this. That was a great trade. It's a 684, up another 9 points. Let me get back to a tier 1. You know, or they kept it and said they closed strong, I'm going to take it. And then today you had follow through. So on day 3, you get back to tier 1. So tier 1 right here, tier 2 as it crossed, closed strong back to tier 1, so you booked some of this trade, you feel comfortable, you feel happy, you no longer have the stress on. And if it comes in a little bit, it doesn't matter because you've made money. But if it goes up a little further, you still get to enjoy the move. And the next real mark here, or the next real resistance, comes in right around here, which is about 700, 705. So there is room, but it would be pretty stressful to say, oh wow, I got in at 671 or 675 and I haven't taken a share off in the 690s. You know what, if you had tier 1, tier 2 right here, and then got back to tier 1 after 2 nice days, it doesn't really matter. You could hold it and you could see, if not, if the move continues further, because you never know where it's going to go, but as long as you have the right entries and exits, it doesn't really matter.
Right. Okay. Our next question is from the Worm in Apple.
The Worm in Apple.
It's like another
Is
great
he a
name.
short, or is he
well,
looking
yes,
for worms?
is wondering, is Apple losing steam here? A potential doji may be put in around 600. What's the red line for continuation / a reversal?
All right, so Apple, it's been the faulty heartbeat of technology, and when Apple has a faulty heartbeat, usually the rest of technology has a heart attack, and that's what took place from 705 all the way down to 505. And I do know from 550 down, we were trying to do little level versus levels, getting little paper cuts. It was definitely frustrating, wasn't easy to deal with, and but that's what took place. You didn't know where we were going to go, and then finally you had that reversal. If we go to the chart of Apple, I will get into a little bit of an educational type of scenario here. I'm going to go over Apple because I trade it very well, and I feel like I know the anatomy of it very well. Okay, if you guys remember in Apple, when 2 quarters ago it gapped down, people weren't sure what it would mean, and then within 2-3 days, it went in the gap and quickly went up to old resistance, broke above it, and then you had a really nice move. It followed the 8-day moving average and the 21 all the way up into the iPhone release. That was 700. Then I remember coming in after my 40th birthday. My 40th birthday was September 21st. Happy birthday to me. I came in and they said they had iPhone 5 million sales. They thought it would be 10 million. We gapped down. Okay, that was your first little sign that there was a chink in the armor. Okay, that was right here. And we closed off those lows. But then what happened? The day after, we didn't even fill this gap. Okay, and that's when we traded below the prior day low, broke the 21 day, and that's when I was on Mad Money. I said, you know what, something changed a little bit here. I'm going from, trying to trail it and stay with it as a swing trade back to a 2-way trade, testing levels that if we broke the 21 day, we'll at least see the 50. And not only did we see the 50, fast forward, we wound up having this head and shoulders pattern ignite, and we went even further than anyone expected, all the way down to here. So the question now is, what's the scoop with Apple? Okay, where can it go? What's the long-term objectives? And at this point, no one really knows. All you know is that on this reversal day, you saw mega volume. I'm not going to put it in right there. The pattern or the whole strategy was when it gets above 522, you put a stop in at 505. And I know that's a pretty big travel range, but we came in that Monday, boom, wide range bar. Paid people for getting involved for the reversal, so the active trade paid off. Swing traders got paid. Everyone that was looking for this day-and-a-half strategy got paid. And then what happened? You saw commitment. You saw it hold the top third of this range. You want to put in a Fibonacci retracement just to show you with analytics. Here's the low. Here is the high. And where do we hold? We held the top 25% retracement. So anything that holds the top 25% retracement shows you power, means it's going to move continuously quickly. Okay, and then all of a sudden, boom, got back in groove. You could have bought again above this pivot here of, 571. So take away these fibs, okay, just to do the continuation here. Another nice trade. I think on this day I sold some, right around 588. And then I did that little Apple video yesterday. I'm like, this is a good spot to probably buy some back. And it held. Went as low as 572. I'm sorry, I said 575. I was a little bit off, $3. So today, I wouldn't quite say this is a doji. I know it closed, not at the highs, a little bit off the highs. But if you wanted to say, okay, let's look at this Fibonacci from this low all the way to this high here. What did it do? It held the top 25% again. So that's still showing you the same way here that you have pent-up momentum. Momentum's not starting to give way, that it could continue higher. That maybe just needs another day. Money was rotating around. So I wouldn't quite say it's a short yet. You have your 200 day at 599. You have bigger resistance at the 50-day at 615. I do think there is still a path of least resistance. What's the word?
Least resistance. You're right.
There you go. Least resistance. Taylor, thank you.
Oh, geez.
Added value. Least resistance.
I'm listening. That's the point.
That's half the battle.
Right.
And so from this particular point, I still think there is more upside. Everyone's thinking, oh, I got to short Apple again. I don't think it's that case yet. But there are some long-term people out there in Apple. You want to go to the longer-term chart, you go to the weekly chart. People are every day emailing me saying, Red Dog, look at this weekly chart. Look at the left shoulder, look at the bigger head. And then we have a right shoulder being built, a right shoulder going into Christmas. It should stall somewhere below, just say the 640 or 620. If it does, maybe you have the left shoulder head or right shoulder, and you do see some type of pressure here, and then you have your neckline. But this is very, very forward-looking. This type of forward-looking is dangerous. As of right now, it's acting well. You don't want to be blind. You want to have a road paved, and the road paved is at least back to 615, and then maybe a little bit higher. And then if it does develop a right shoulder and starts to head lower and starts to show relative weakness, we'll uncover it. But for right now, I don't think that's the case. Let's figure it out. Let's know it could be there. We don't want to be, with blinders on like a horse racing and say, oh, it's Apple. It has to go back through 703. It's the best company in America. We want to know that it had a harsh move lower. It's in its retracement process. Where does it stop? Then how does it act? And we'll continue from there. At this particular point, you go back to the daily chart. I do think that it's not giving you any signs yet that the run is over. You want to I'll show you one more little thing here from this gap up. It's still following this nice little uptrend. It's still intact. So I don't see any faulty signals yet.
All right. Thanks, Scott. We have to take a quick break, but we'll be right back.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Hi, welcome back. Okay, we have a next question from Stock Vicar. In sector rotations, is sector rotation something that you look at regularly, or do you mainly focus on Apple, Google, Amazon, and stocks of that world?
Well, a lot of people ask me sometimes, like, why are you just so enamored with Google, Amazon, the high beta names? Because as a trader, that's what moves, right? You want to be involved with something, and when it triggers, you get paid. Right. The pattern triggers. But, you can't be a one-trick pony, and as far as other sectors, that's why we bring in someone like Nicole, we bring in someone like Stephanie Link, like Jill, Lindsay, that introduces other names and ideas to us, whether it's the industrials, whether it's the ags, whether it's other situations. And I know I feel sometimes like an old dog. I know my name is the Red Dog, and I like to stick with what I'm doing. But at times, there are other sectors that come in vogue that can give you relative strength, that could pay you just like a high beta technology name. And we've seen that in some of the pharmaceutical stocks. I know, like, look at ESRX, for example. Guys were talking about it. This one actually was not the right name that I was thinking of. But anyway, you gap down today. I think I'm coming up with it. It was because it actually had a nice move from this lower level, but still in there. I think actually REGN, right? Was that the one that?
REGN?
REGN. Name, I haven't traded. It's a pharmaceutical stock. And look at this. It's been an unbelievable mover. And people have tried to bring me to the Oasis to drink water, and I've been like, you know what? I like my Macintosh, Apple. But anyway, here was a nice wide range bar, continued higher, flagged right there, showed you continuation. Powerful move. I have not traded it once during this entire move. This is what, from 145 to almost 190. Really profitable move in a sector that I don't look at, and doesn't mean that it can't work. Doesn't mean that it's not going to be on the move. And this was a situation that worked. Okay, there are times when different sectors show their face, and there are times when I'll be more involved when the financials are moving. I'll be more involved with Goldman, maybe Bank of America, maybe some of the others. If the ags are moving, I look for relative strength. I look for Monsanto. I look for CF. If all of a sudden the home builders look like they're making new highs, I'll go there. But typically, what I think as a trader, you have to have your bread and butter. You have to have stocks you're used to. You have the stocks that you know very well. You know the speed. You know the composure. You can make money on them every day. When they're really set up, you could actually hit a double or triple versus just making your singles. So as far as why do I stay focused on my go-to list? Typically, the go-to list is they're just the fastest moving, best set up stocks out there, kind of like in the IBD 150. Or 50. You haven't even heard me talk about the casino stocks like I used to talk about a lot. You know why? Because they're not moving well. I haven't talked about the cloud computing space like I used to speak about VMW, every other day or every few days when it was on the move, and now it's in a corrective phase and it's kind of choppy. So typically I focus on my price point sheet or stocks that are on off the charts that act best, move the fastest, have the best setups, and are in the market's eye. And if I'm not looking at it, if you want to send it to my attention, Scott at T3trading.com, talk about it on my virtual trade floor. I'm willing and I'm open to ideas of stocks that are moving, that are clean, and they always do change. Same way even like LinkedIn. LinkedIn I was talking about a lot 2-3 months ago. Lately, out of play, not worth the time. I've been focused on Facebook. And when LinkedIn was great and Facebook was on the decline, wasn't really that focused on Facebook. So I try and go where the money's going, and as a trader, that's where your best interests are set.
Okay, on that note, we have a question from Jim Collins, 47. Scott, when you're trading the high betas, how do you determine which ones you're going to trade and which ones to pass on?
Well, that goes with the your A, B, and C list.
Right.
It goes with your tight setup. What's set up where you have a tight situation where you know your entry, you know your exit, what's in a day one breakout, what's in day 2, day 3, so you know what's compelling and what's not. So you have a list of these high beta names. And recently, there's been some rotation. I know that, starting November 16th after, Apple had that huge decline, Apple was my focus. And Apple was my focus. Went to 590 or so. I sold some, and it was the first time last night or so, or 2 nights ago, that I was out of it. And I wasn't even enamored with Google. Google had a great run, had the earnings, was in a corrective process. I'm like, you know what? Google's off to the sideline. And then Google came on my radar right around here, right? Google had a nice tight pattern. I showed you before. Had a wide range bar when the day the market was weak. So nice 3-day sweet spot. Okay. Apple right now, this was your big day and a half move. Went to the BC list. Here went back on my sweet spot list. Gave you another day and a half, and then it became another B list type of trade. Priceline, also crazy stock. Here is when we talked about it on a morning call, came back up. This is when it was in focus. A list, now it just had a nice 2-day list, 2-day trade, now it's on the B list. So things change. Amazon hasn't really been tight. It's moving up, but it's hard to deal with. So I know that it's had a really big move and coming back to the highs, and everyone's like, Redler, why aren't you trading Amazon? Because it's just like an elevator up. I like to see a move up, sideways, continuation, bull flags within a trend, and this one's just really not waiting for it, so it's not conducive for me to feel comfortable getting involved. Same way, like finally MA, it's not a high beta name, but this one came on the radar because what did it do? It had a big move back to resistance, had a descending trend line in place right in front of the old highs, inside range. Was a nice, powerful day yesterday, and it gave you a little clues that I could break out and give you something calculated. I like calculated, defined trades. And unless I have a calculated, defined trade, if you come back to me, I don't consider it an A setup. So when stocks are up 7 days in a row, it becomes hard. Because after day 3, day 4, to me, it becomes a little risky, so I'd rather just let it go. Doesn't mean it's a short, but it's not a calculated long, something I could sink my teeth into. So same way right now, like everyone's like, oh, you long a little bit of Apple. Do you love it? I'm like, not really. It could go to the 200-day at $5.99. It could go to $6.15, but there's not a lot of meat left on the bone. There's not a flag type pattern. It was a little interesting. The last day or so, it consolidated through 590. It did go to 594, and now it's a little choppy. Now Google had its tight range, expanded off the A list. Priceline 2 days through the descending channel, off the A list. Amazon never gave you the chance. Baidu's been relatively weak. So you want to just make sure you have the right pattern. And when you have the right pattern, sometimes it could be a laggard. Sometimes it could be a mid-tier play, but as long as you have a defined pattern and you know where your entry is and you know where it could expand, it could be anything, and as long as your risk is defined, it can wind up being a profitable trade.
All right. Our next question is from Zong.
Zong.
And a few other people have asked about Baidu today. What's your opinion on the rally?
Well, I think as as the rally continues and it broadens, and something like Baidu, which used to be a name that everyone loved, it was a go-to name before it started to break down and was somewhat broken, shorts get scared. We just came, 70 handles off the low, so a stock like Baidu that's been considered a growth stock, that considered something in the past that paid off a lot of growth investors, people are like, okay, we'll rally back on, let me cover, and then figure it out. So today, I know Sperling was talking about, getting long, and I'm like, it's a broken stock, it doesn't really, interest me. You look at the chart pattern here, and you'll see that finally, from the lower level, like we talk about defined, right? Here's the defined lower level. So if you were short, okay, first of all, this is when it failed. This is when it looked good a little while back. So you go back to the macro chart. This is when it tried to make a comeback. It broke this descending pattern type here. You had a gap, held it. So I thought maybe it would be back and play. And then when it broke this and came all the way back down and couldn't rally back above, this was off my list. Became like a D list. All right, so down here, the question was it going to get to 80 bucks or 60 bucks, or was it going to rally back? So with this type of market rally, people are scared to be short. So with that said, a little talk that China might be bottoming and that search is okay, it became a nice little trade. I know here was one pivot. The high here was like 96.34. You had another high here at 97.41, closed near the highs. So who knows? Maybe it could make its way back all the way to this broken support. Support typically becomes resistance. You also have a moving average. So maybe it can get to 107 or back up to here. But for me, you have to be very careful with the laggard trade. Okay, you have to be careful short it, considering that it has been a really nice performer in the past, and there are memories. And then you have to also be careful long it, because once the market composure changes, it has been weak for a reason that this might be all you can get here. So at this point, it's a trade. It performed well on a micro basis today. So just make sure you monitor where resistance 1, resistance 2 might be in order to trim and trail it.
The theme.
The theme.
Okay, our next question is from Rich Wise Genius. What's going on with Bank of America? Could one initiate a long here? Or is it wise to wait?
What's his name?
Oh man, it's a tongue twister. I hate you. Rich Wise Genius.
Okay.
God.
So he's asking, as a wise genius,
yes.
if it's wise to get, he should know. I should ask him. Give me his email. But Bank of America, it's just an interesting animal, so to speak, where I've said, put this stock in the drawer. I think in 2013 it could be 12 to 14. But then anytime it ticks down, people are like, what are you doing with Bank of America? I'm like, didn't I say this is in the drawer? If you're trading one stock, the last stock it should be is Bank of America, because Bank of America is not something that trades in big ranges. Yes, you get high percentage moves up and down, but unless you're taking big size, it's not going to pay your bills. But if you're looking to put on a stock within your portfolio approach of 4 stocks, 8 stocks, 25 stocks, this is something that is showing relative strength. It's something that can be in your arena. As a momentum trade, it hasn't shown its face. As a macro/swing trade, it's fine. It's just, could drive you to drink. And right now, unfortunately, I'm drinking Starbucks and it's Thursday, so.
I know, let me get out of here.
Maybe at some particular point, we'll go to glasses of wine and it'll be fine. But at this particular point, you go to the chart of Bank of America and you'll see it's still fine, right? Look where it is. Yesterday, everyone was crying to me, oh my God, Bank of America, it's breaking down. Meanwhile, it's right back at 983. Right back near $10, right back where it could be breaking out for an additional move. Yes, it's choppy and it's hard to deal with, but overall since September, it's only been in like $1 range. It's still between $8.80 to almost $10, and it's in the upper end. It held the half end here. It's still acting well. It's above all the moving averages. You go to the XLF to try and see if it has relative strength to the group. Okay. Look where the high end of the XLF is. It's so much higher. So you do see relative strength within the financials. And granted, Spiders made a little bit of a higher high. So did the RTHs. So did the Qs. Banks are just lagging a little bit right now. So back to Bank of America. On the daily chart, very choppy. For a macro play, you go more to the weekly, which I think is better judge, and you will see that it's hovering right near the highs. It's in the upper end. It's showing commitment. It's above all these moving averages. This stock gets through $10. Next stop pretty fast would be a little bit before 11, then 11:44. And I do think that there is a case for this thing to be 12 to 14 next year, but you just have to know your time horizon. Put it in your drawer, put it away. If you're day trading this thing, it could definitely drive you to more than Starbucks like I'm drinking right now. If you're looking for a swing or a macro trade, 12 to 14 is not out of the cards. And you look at the monthly, look where it is. It's all the way down here. That's what I'm drawing right there, 12 to 14. That is 20 to 40%. All right, you go to your savings account, you're going to make 1. You go to something else, you're making 3 or 4. This has the potential. The risk reward is in your favor. I do think that this is something you should put on your palette.
Okay. Okay, kind of switch
some gears.
Switch some gears. Slipstream is asking about how your monitors are set up in general. Do you have multiple time frames, several stocks on one screen, watch lists? Can you just give us a...
My whole routine is like huge. First of all, anyone that follows me on Twitter, I'm usually tweeting around 4:45 in the morning because that's when my alarm goes off. I'm a creature of habit, I'm a creature of routine, but in order to do your routine every day, you must like it.
But I'm interrupting you.
You're interrupting?
Because they're just asking about the monitors.
Oh, the monitors.
Yeah,
so
like
you're trying to cut out the fat
up.
and shut Red Dog up?
Yeah,
okay. So here you go. I have 6 monitors, and within 2 of them, I have different charts that toggle to my level 2s. So I have a 3-day 5-minute, a 3-day 15-minute, a 5-day 60-minute, and typically I put together my game plan based on daily charts. So what I do is I have 4 different time frames that I could look at when stocks are moving, so this way I know whether or not it's compelling or not. And when those time frames line up, that's when I know whether to go with more than a tier 1, tier 2, or tier 3. So sometimes when the market changes and you've had a huge move lower, you have to put like a 10-day 60-minute to see where bigger support is on whatever it is you're trading. But typically, for intraday, I look at a 2-day 3-minute to base some cash flow decisions on, but I really make my macro game plan on daily charts, and then whenever they all line up together, that's when I put some more money behind an idea, because that's when you want to have more money working, is when all time frames line up, not just a few. And thanks for shutting me up.
Sorry.
It's all right. Yeah.
Got to answer the question. All right. Question from Deborah, 4908. There's a lot of girls in here. I like it. Can you talk about the fertilizers? Monsanto, SQM, pot. Kind of been talking about them in the chat a little bit. So.
Well, pot's not been smoking. It's been a laggard. It's been a bad trade. And, back a few years ago, pot was, before it talked about getting illegal. But anyway, let's go off that subject. Monsanto, here you go. This we went over with Jill. Okay, actually look at this on the weekly chart. Long term, it's coming in close to some really big areas. So Monsanto is a leader, and I talked about it with Jill today around 92. I said it could be something that continues to the upside. You go to the daily chart of Monsanto, and it did break above the line we talked about today. It didn't have power and continue, but look where it came from. So at this point, I would say as long as it stays above 92, it's okay. I know we spoke about AGU. It too, as a trade, if you weren't involved in this big gap down, it poked its head up a little bit today. Nice little flag type pattern. You have a gap right here. This AGU looks like it's trying to break above. If it can continue above 102, I think you have a nice active trade to 105. I know CF is something that our guys look at it a lot, and it did break above this little area that I defined today with Jill in the morning call. But then everyone back in the day, this was the one, but look where it is. It's such a laggard, and I don't know what's going to take to change. But look where it is as far as what was this? This was a year ago, and now look where it is. So I guess fundamental people are looking down here, but overall on a day trade. Granted, it could be a lower level trade, but it's still, this is just JUNK, I'm sorry to say it. Mosaic gave you a little bit of a trade today, but overall, you go to your macro chart, not paying off investors. Look at this big move up. Look where this was in November. Look where it is now, but then you look at something that showed relative strength like a Monsanto. Look where it was in November down here. Look how it's been trending. So you just want to make sure you stay with the relative strength within this group. It's a very fundamentally driven group, and if you come back to me, you'll know that Jill talked about seasonality and says in December the ags come into vogue. And if you look real quickly, if you don't know which one to choose, you look at the MOO, which is the MOO, which is an ETF for this group. I do think that you have a nice descending little channel here. You might not make as much bang for the buck, but if you wanted some exposure, this was a nice little spot. It got above 92, held above it. So I think, 52, the next level here on MOO is about 53.19. And if you're a little bit more sophisticated, you can look for the relative strength.
All right, great. Our next question is from N-Tense99. What's up, Scott?
What up?
Thanks for your awesome daily shows. Hey man, what do you think of Starbucks and eBay?
What do I think of Starbucks?
Yeah.
Let's see. Starbucks, necessary after a long week. I was in Starbucks, and that was one of my portfolio approach swing trades. About a week ago, I put it on. It started to act a little faulty. I probably sold it a little early. I haven't looked at it in the last day or so. So let's take a quick look at Starbucks. I dropped the ball there on Starbucks, and it just shows to show you if your risk tolerance isn't there on this day. Like here you go. Like it just goes to show you your time frame, right? Here's your gap up on earnings. Came in. Here was your little reversal. What'd you have here? You had a nice gap, right? This gap maintained open, so shorts couldn't cover it. Showed you some dementia. Not if you have too much caffeine. Showed you some demand. Came back up. I think I bought around here. Flagged. I saw a little outside day. See, the whole thing is here on a small time frame. This, the little outside day here got me a little worried. That okay, we came back to resistance. We closed it near the lows, and then when it started coming down yesterday, I'm like, I don't really love Starbucks. Besides drinking it, I'm going to get out of the way, and meanwhile reversed, and I got out of it. So I stopped myself out. I said this was my stop, and I stuck to it. And then here's what happened. So, with me out of it, who cares? What do you care about what I'm thinking? All I know is that it came into some bigger resistance, right? You go across this wide range spectrum, and I wouldn't say it failed here. Look where it came from, but it couldn't power through. But the whole market doesn't know how much power it's going to have right now. So I would say as long as it stays above 50, 80, another dollar downside, I think it's fine, and I think it's in the game. You have a gap here, great franchise, made a lot of people a lot of money. I think that it's somewhat fine. I don't see anything so clear-cut. It's not compelling to me where tomorrow I'm like, wow, look what he brought up. I want to buy Starbucks tomorrow. But it's still fine. It all depends on your time frame.
Market Picker is asking about, on the weekly chart of Starbucks, if there's a W pattern.
Weekly. Let's go to the weekly. A W. W is in a winner. Weekly looks good. Weekly you had your first move, came back up, higher low. You want to see something on a weekly. Here's your low. Here's a higher low. Came up to resistance, held higher again. So you would think that it would power through here. So on a weekly chart, I'm not sure it's a W type pattern, but it is showing a bit more constructive. It's above all the moving averages. So I would think that it does look decent. This looks like it's in the game. Market wants to go higher. Starbucks is not a laggard right now. It's a stock that could be on your go-to list.
Okay. All right, we have a question from Dino D.
Dino.
What does T3 and T3 Live stand for?
Oh, okay. T3 and
Did
T3
I put you
Live.
on the spot?
That's fine. No. T3 is, there are 3 trees. 3 trees. There, in my backyard there are about 10 trees, but for T3 you have trading, which I hope I say this compliance-wise so I don't get fined. We have a CBSX broker-dealer where we have associated members trade in our broker-dealer, meaning that they are members of our broker-dealer and they are professional traders and they all have different scenarios. That's T3, that's the trading side. Okay, then you have training, which we have education. Those of you that watch us, some of you have taken our active educational courses, an active trading course, a momentum trading course, a swing trading course. So that's a training education side. Then we have technology, which is T3IP. I don't know if you saw my CEO, Sean, battle it out with Mavericks guy on Fast Money. What was his name, Mark Cuban? Anyway,
don't quote me.
Don't quote me. She's not a basketball fan, and she didn't see Broadcom take over, Broadvision, whatever, way back when. She was in fashion.
That was a long time ago.
Right, that's a long time ago, but she's a hell of a trader right now, doing great. So the T3IP is our technology division. So when people are on our virtual trading floor and they see if I buy a position and it shows up green on the virtual trading floor, we have a technology division that does it in a millisecond faster than your eye could see. It's on there. So we have 3 different elements of our company, and that's why we have T3, trading, training, technology, and a lot of different people fall in a lot of different aspects, and that's why we are named T3. And when we merged, it was very interesting on how that name came about, but that's a different story. Let's go to the next question.
Okay, our next question. Can you help me keeps asking a few questions, so I will touch on one.
Who? Can you help me? So he needs help.
Well, he's asking about how T3 can prepare people to be cautious if there's a big downside coming. He's asking how we would handle that.
Well, I also am a big advocate of IBD, Investors Business Daily, and their whole big picture has different spectrums, right? The condition of the market. Are we in a confirmed uptrend? Are we in a market under pressure? Are we in a correction? And each one of these different conditions, gives you different ways to approach your trading account. Whether or not I'm getting the hook, but I'll get into it. Whether or not you should have risk on, risk off. So this is a great question to ask, to exit on, because in the past year or so, I've been giving different types of, just say, seminars / speeches on how you could approach your portfolio if you're not a professional trader, where there are different chart patterns in the market that you could respect. And I'm going to quickly go into them before we end this segment, because I think it's very important. You go to the SPX, okay? Let's go to the daily chart. All right, I'm going to show you how over the past 13 months, okay, just so you know, I did this morning, I'll do it again, okay? Here was about 13 months ago. Here was your outside day, a day when the market reversed, a day to put risk on. Okay, from there we went from about 1100 to as high as 1300. Tipped out right in front of resistance, time to take risk off. Then we wedged, another chart pattern. A lot of things happened within this. All of a sudden we were set up to go again coming into the first quarter of this year. First quarter, broke above this wedge, time to put risk on. Wound up riding the 8 and 21 day all the way up into the end of the first quarter. Then we had the head and shoulders top pattern. Left shoulder, head, right shoulder. This pattern happens all the time. And then in this little spot right here, we then went into IBD correction, time to take risk off. Broke below the neckline, and then the measured move was from about where we were at 1420 all the way down to the neckline. It's another almost 80 handles. Then what happened? We had another outside day. This outside day was a spot to switch gears, and from the June 4th low, had a nice rally, right? Until we hit the oscillator plus 60, 1474, time to get cautious. Here's when IBD went to market correction again. Here's when this uptrend broke. Time to take some risk off right around 1433. And then what happened? Trends break, you break. Then we had the outside day, time to put risk back on, time to measure it. And from 1350 back to 1422, nice 70 handle trade, especially if you took it off right here because you saw this trend break. So, if you come back to me, moral of the story is, if you're a professional trader, within those 6-7 chart patterns, you've maneuvered your account hundreds of times. You've traded hundreds of thousands of shares. But if you're not in that position where you're in front of your screen and you can maneuver your account from a net long or a net short basis, you can maneuver your account 6-7 times a year to take risk on, risk off, so you're not in pain during market corrections, and you also could press when the market's in your favor. So it's up to you to figure out the time frame you're trading. It's up to you to learn how to identify these patterns, and hopefully we can give you a basis for understanding why, and then once you actually know it, trust it, and could execute on it, you could be firing on all cylinders. And I just had a big speech there, so I'm going back to
I think it was
Taylor.
great. I think that's, he was looking for an honest answer. So we have to take a quick break, and then we'll be back with just a few questions to wrap it up. Thanks.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Okay, we're back. We have a question from Tharps22. What do you think of 3D printing stocks, DDD and SSYS, attempting to break out?
All right. Just like in any bull market or in any new uptrend, so to speak, there's always new leaders. And I will say, honestly, I missed out on a lot. I did not trade DDD once, or I didn't trade SSYS once. And both these stocks made new highs. Both these stocks have been in a bull trend. And I didn't convert early enough for them. So if you want to quickly go to the charts of these, you will see that, above the 200, above the 50, above the 821, this has been a very strong stock. All right, short term, today when the market was up, it kind of reversed. Didn't give back all of the breakout, but gave out half. So I would just be a bit more careful here. These new momentum names, you know, they have a lot to prove. They don't have a lot of institutional interest, and it's had a big run all the way down from look where it came from. So if you're just hearing about it now, typically by the time you're just hearing about it, you have to be a little bit careful. I'm not saying it's done, but I don't think you should just jump in. SSYS also, look where it came from, all the way up. It's extended above all the moving averages. These have been really big winners. If you caught them early, at this point, both of them had little reversals where they traded through the prior high, came below, extended from the moving average. So if you long them, stay with them, but if they start breaking below 73.26, I think that it could be a little trouble. This is just like a case in point or a good example of why you have to be on the lookout for new industries, new groups, new stocks. IBD has them, we try and have them. And at this particular point, I just think it's been a long road, and I don't mean it's over, but I just don't want to see you jumping in because people say there's excitement right now.
Okay. And our last question. Scott, a lot of people have been asking how you go about choosing a portfolio versus a tactical approach. If you could touch on that.
That's a great question, because even today on Twitter, people are like, well, it shows you're short spiders. Are you still short spiders? I'm like, yes, I'm short spiders, but I have 6, 7 longs. Right. So I'm not net short. I'm just trying to protect my longs so I could sleep at night. So if we open down, what I could do is I could then cover my short in the spiders and then add to stocks that are showing relative strength. So with that said, it's a hedge. I'm not smart enough to be like some of those guys out there that are like 7 longs, 7 shorts and non-directional. I like to be directional. But when you get to certain areas in the market, like today, we hit the 50-day moving average on the S&P, and we hit the 200-day on in technology. So first time you get there, you usually back off that area. So I would add a bit more of a tier on my short side. So this way, if we pulled back, I wouldn't feel the pain of the pullback with my 5, 6, 7 positions. So I could then cover my shorts, add to my longs, and continue to maneuver the range. So if you look real quickly at the chart of the spiders, what I do is I typically, I like right now I think I have like 5, 6 longs. I'm not exactly sure what, but first time we went from this reversal low, I was directional up until here, and then on this day, Taylor was right there also. Taylor's like, what should we take, short? We're coming into, these this resistance, right? This 1403 to 1408, it was resistance, so you would think that we would pause here. So at this point, when I was in like just a tier 1 short, I'm like, you know what? Let me get to tier 2, tier 3 short. Because I think we can make some cash flow. And if you remember on Monday, we opened down. So on that open down, I covered some of the extra tier, the overlay, which I call it, and got done with my tier 1, so to speak. I mean, my tier 2 or 3 short, and I added to some of my longs. And then yesterday, when we flashed lower into the Fibonacci range, I think I took off my entire hedge, because I'm like, you know what, from here to here, I'm taking it off. I'm going to be pretty directional again. And then on the close, I was back to 5, 6, 7 longs. And I said, you know what, time to, just insure it just in case we have a gap down. We gapped up, added a little bit into the moving average. And then if you go to the 5-minute chart, you did have a bit of a move down right there. That's when Boehner said that, Democrats want us to go off the physical cliff. So right at this wedge, we came lower, covered a lot of my shorts. Didn't necessarily grab a lot of longs, but I'm like, okay, gave me a way out of my hedge. And then we came back up. And now today, coming into the close, Taylor, if you come back to us, right. I don't know exactly because of compliance, but I think I have like 5 or 6 longs. Okay. I have a bit of a hedge on, and we're in a spot where, first time you hit it, it's probably better to have a bigger hedge, but, we hang around here. Next time we're probably going to get through the 50-day of the S&P. We'll probably get through the 200-day of the NASDAQ. So the way you want to sleep at night is just in case something crazy comes out and you're holding 5, 6, 7 longs, you want to have a hedge on. I know it'll take away, like today, we were up 7, 8 handles. Right. How many positions did you have overnight? Long?
I had 3 about.
And you had 1 hedge on, short. Right. So it took a little bit away from what you could have made on the gap up. But when you went home at night, you were like, okay, if something goes wrong, I'm fully, I'm in harm's way. Right.
It was a safe thing to do at that point.
It was the right thing to do. Right. So with that said, with the portfolio, I'm not a believer of 7 longs, 7 shorts, 10 longs, 10 shorts. I think when the market's in your favor, you go directional. But when you're at certain spots, you have a hedge on just in case we open down so you can fund your positions. And if we get extreme, like we were from November 16th into that Friday of Thanksgiving, excuse my, my voice right there, you get a little heavier because you can take advantage of stretches if you know what it means technically. And I made a decent amount of money short from Friday's close into Monday's open, and I was still bullish, but I was able to take advantage of that range because we went from, 1343 up to 1409. It was a little bit too far, too fast. So I put it on, got back comfortable, almost like a tier system for the hedge, and then maneuvered the rest of the week. And that's what I think you should be doing going forward. There's a bid in this market, stocks are working out, stay with situations you like, use a tier system, have a hedge just for safety, and embrace the market. Don't fight it. You can't control politics. You can't control what's going to happen with the physical cliff, with what the situation is around the world. But what you can control is this: your keyboard, right? and how you push the buttons and how you approach your process. And as long as you have a process, you'll always be profitable, prudent, and safe. And I'll let you close it up and say goodnight.
Thanks so much, guys. I know
see you next
Brittany is
week.
so great, and so I feel very special that I get to fill in for her today.
And we'll see you next Thursday. Have a great weekend.